welcome. You've joined us on Midcap Masala right here on ET Now. I'm Ashesha Advaryu and with me is Srishti Sharma. And first up, let's put the spotlight on Kirloskar Ferrous then. And the company has been in focus for the last several trading sessions on the back of several news pieces. And to understand that, we now have Mr. R.V. Gumaste, Managing Director at Kirloskar Ferrous Industries, now joining us. Mr. Gumaste, afternoon and thank you so much for joining us today. And let's first talk about your Hiriyur plant, which continues to remain closed for maintenance and repairs. How significant is this plant for your operations, and as a percentage of your total production, how much does this plant contribute?
I think in terms of good morning and thank you very much for inviting me. And Hiriyur is, we have totally 4 businesses: pig iron, casting, steel and tube, and it's part of the pig iron business, and its contribution to the total revenue, I think it's below 10%. And more important is, I think last 3 years, the pig iron prices have been dropping continuously. The margin pressure is very high. And what it's taking out the sales is the tail end sales, and should not make very major significant difference to the bottom line. However, it will affect the top line sales.
All right. Hi, Mr. Gumaste. This is Srishti also joining in. Good to be speaking with you. So many positive announcements coming from the company. But talk to us about the demand prospects. How has the demand been across segments, the pig iron casting, and which segments are aiding the demand for the casting segment? Is that strong from the auto sector?
Yeah, let me start with the positives first. I think the castings are doing very well. The demand for casting is very strong. And the main demand driver there is the tractor. Tractor is positive, I think, showing chances of 9 to 10% growth this year. And we get a positive push for the casting sales. Auto is reasonably well. We were looking for infrastructure area doing well, but I think they are down 5% this year compared to last year. But however, we are doing well on the infrastructure related castings because of the new product development, improving the share of business. And overall, I look forward this year, we should grow in the casting anywhere between 15 to 20% volumetric tons. And with the new and better castings being developed, we are retaining the the sales realization with a better product mix. And because of that, we will get the benefit of 15 to 20% sales growth in castings. And coming to tube, I would say that tube goes to various sectors, including oil and gas, power sector. We have a good portfolio of tubes. Because of that, I think we are doing quite well. But as you know, commodity prices, starting with pig iron, steel prices have come down substantially. And because of that, tube sales realization is down. We are trying to retain our margins, whereas we have given the benefit of commodity price reduction to our customers on tube sales.
Okay,
and
so that's...
I would say steel part of it is we are trying to push the steel sales. I think it's going well. We are yet to really become a major player in steels. We are still a very small player in steels, that in the alloy steel segment. So overall, I would say that it's a mixed basket. Major reason is the pig iron. And demand for pig iron is all right, but margin pressures are plenty. It's a surplus supply, and we go through this cycle. I think I've seen many cycles. This is one of the cycle, but the commodity price going down has been pretty long. It has been dropping last 3 years. And I would like to just add one more thing. This is the coal prices have come down, giving some relief, whereas iron ore prices have not come down. Iron ore remains landed price of 7,000 rupees, which is difficult to sustain in the dropping pig iron prices or
Right,
both in
right.
general steel and tube.
We get that, Mr.
Iron and
Gumaste. So
steel.
commodity prices continue to remain volatile and that continues to weigh heavy on your operations. But other than that, as far as the recent Hiriyur plant is concerned, that contributes less than 10%. So we are not expecting any major impact on operations and financials going forward. Mr. Gumaste, thank you so much for taking your time out and joining us here on ET Now with this quick update and demand trends for your industry. That's all the time we have on this edition of the. Thanks so much for tuning in, but don't go anywhere. Buy now, sell now will come up next.